Lou, let's move on now to DuPont. This is the specialty products part of the business. That's the part of the business that Ed Breen is coming along with to run. What should investors know about this new DuPont and what it's going to look like?
So this is more of a finished product business, and they have exposure to a lot of different industries. Nutrients that go in, from your protein smoothies to just supplements in packaged products. Electronics, transportation, adhesive, safety, construction, imaging. This is sort of the applied chemistry business that, again, was part of both companies, but not necessarily a dominant part of either. So it's sort of, again, the logic is create a larger, better company that has more scale and more exposure to different businesses. This, thanks to they're going to have some higher R&D than, say, the commodity business. They also, hopefully, are more profitable. Of the three businesses, they are by far the most profitable in terms of EBITDA margins. Margins, I think, of 32% in the fourth quarter compared to maybe 8 to 10% on the ag and mid-teens on Dow from memory. There's a lot of different cyclical exposure here because they are in so many different businesses, but that also can be a plus for them because barring a global recession, as long as there is growth somewhere, they can sort of ride out storms. I think in the last quarter, the margins on electronics were something north of 50%, but that wasn't growing that fast. Safety construction, lower margin, but it was a huge grower. So this is a business that is set up at least to have a lot of different ways to win and exposure to a lot of different markets. Again, it's now going to be a larger portfolio of products. You can spread the R&D over a larger base than you could either for Dow or DuPont as an independent. And, make a run at it that way.
Yeah, Lou, and with Ed Breen coming along, we'd mentioned, as we prepared for this show, that we could see some further splits. I mean, that's something that Breen did at Tyco, had a split and then subsequent splits thereafter. What opportunities might there be, for the company to realize value there from additional splits within this new DuPont?
Right. And Tyco was a master of, or involved in everything. Master of everything may be too much to say. But yeah, he accidentally split that business three ways and then split the part he stayed with three ways. And there were all sorts of divestitures and mergers from there. I don't know if we'll see another three-way split, but there are definitely some of the activists that were involved. Dan Loeb was involved with this. He was hoping for more of a split of DowDuPont, maybe 6 ways or so. A lot of that extra stuff that he saw as maybe being viable candidates on their own came from this portfolio. I think the nutrition business, I would almost bet that we'll see an IPO or a split of that sometime in the next couple of years, because that nutrition business is sort of a standalone and it's growing. It's got some of that same potential we talked about ag. I would be shocked if this portfolio isn't revamped over the next couple of years, and hopefully for the best. I mean, again, at that point, you have to trust the managers, and hopefully Breen's experience, he can do it again. But this business is, just by the nature of it, with its different areas of expertise, and there's not necessarily synergies between a nutrition add-on and the electronic displays. There's a lot of logic in trying to create more value over time by breaking this down further.